Hi, Chris.
Hi, Richard. Are you okay?
Good, thanks. You?
Yeah, not too bad. I'm suffering with sciatica at the moment, so I'm on crutches.
Oh dear,
Oh, it's killing me.
that can't be good.
Oh, I've had it for 2 weeks, so it's absolute agony.
Yeah, I feel sorry for you
Oh.
after your bout of COVID, and
Yeah, there's nothing going right the last couple of years, I can tell you that.
yeah. Hi, Tony. Good, you Richard. Just the three of us, but I need to get cracking. And here comes Anne. So as soon as Anne gets connected, I'll get started. Hello, Anne.
I was going to say good morning, good afternoon.
Good afternoon. I got a message from Benny saying he can't make it. He's going to have to watch the recording. So I need to get started, partly because I've been asked to, instead of streaming into the Facebook group, I've been asked to stream into the YouTube so that we can put that, you can actually find that recording in Discord along with Paul. So I'm trying something new here. So I just need to take it nice and slowly. So share screen, that should be the same, except that's not what I wanted to share. So bear with me 1 second. This is what I meant about needing to take it slowly. Where are we? Every time you change something, you hit a problem. Right, so if I go back to Zoom and move you guys back up there, and should be able to share now. Right, okay, so bear with me if I'm a little bit slow this time, because it's slightly different streaming into YouTube than it is streaming into Facebook. So
there's no rush, Richard, just take your time about it, it's fine.
Yeah, I'm also going to take it fairly step by step today, because we've got a few people who are not on, or may not be on Zoom, who will be watching on the free trial, on the 7-day trial. So I'm going to make it sort of step by step.
Well, David's sitting alongside me. That's my son. He's watching for the first time, so he will very much appreciate step by step. So
okay, so this is, again, as I said, it's a very basic, simple step by step. And apart from the fact we've got new people, it's the time of year. I'm noticing that we're not getting as many training opportunities as we normally would do. We're right at the end of June and it's halfway through the year. So for that reason, things are a little bit slow. So I'm going to do the first step. I'm going to explain that I've got what I call a naked chart. I'm on the GBP USD, and I'm on the 15-minute chart, and I've stripped everything back. I've only got 3 additional things on that screen, and one is this horizontal dashed blue line here, which is actually the crossover from yesterday's trading to today's trading. So you can see that the last candle was a 15-minute candle, was at 21.45 last night, and then the next candle was that candle finished at 2200. So that was the handover from last night's trading to this morning's trading if you were in Australia, and the Asian market opened at 10 p.m. last night. So that's the first thing I've got on the screen. I've also got this icon here, which is a reminder to me that there is some news. In this case, it's US dollar news. And I'm just going to show you how to put these 2 things on your screen, just in case you don't know. So if you go to the top of your screen, just up here, I'm going to move that out of the way, where it says there's a cog up here and it says chart settings. If you click on that and you click on events, you'll see session breaks. And if I just untick session breaks, you'll see that that line disappears. So that line was there, it just disappeared. And also, if you look at economic events and charts, if I just move this out of the way and bring this one across. So I'm looking at this, I'm going to untick it and it disappears. So I've got those two things ticked and I go to OK, and that should appear on every chart that you now open. So I'm only interested in today's trading, which is why I've got this blue line here. Now, the other two things that are on the screen is a green line and a red line. That's a trend line, which you get from this column here. I've got it in my favorites. So if I want to put a trend line on, I just click where I wanted to start and click where I want to finish, and I can change the color in there. And so that's how I've got these trend lines on. So the crossfire strategy is straightforward. Forgive the pun. In my eyes, it's the most straightforward strategy there is, partly because it's based on two lines. And we look for price to go above the green line, in which case we're looking for a buy. And if price drops below the red line, we're looking for a sell. The other good thing about this is there are only 4 pairs that we are looking at any one time. And I'll explain that if I go to Euro USD. I've actually got that information here. So at 1 p.m. to 3 p.m. UK time, we look at these 4 pairs. If you're not available between 1 and 3, there is an alternative. And between 6 a.m. and 8 a.m., we look at a different 4 Forex pairs. So the reason I like Crossfire is I'm only looking at 4 pairs at a time. I've got two chances to trade during the day. If I get up at 6 a.m., I can do these 4. If I'm around at lunchtime, UK time, I can do these 4. So I find it easy from the point of view of which pairs to trade and also which times to trade. That's why I like Crossfire. And these days, I almost entirely trade Crossfire, or should I say exclusively trade Crossfire. I do occasionally have a look at other strategies and other pairs at other times, but mainly my trading is between 6 and 8 a.m. UK. If I get a successful trade, I don't always trade between 1 and 3, but my live sessions are always between 1 and 3. So that's just the basic introduction. Basically, we look at we start off looking at the 15-minute chart, and we look at this 1 o'clock candle, which is still developing. We've got 6 minutes left on this candle, and we don't actually do anything until that candle closes. So one thing that I like to do in between time is I have a look at what happened this morning. Well, something that happened this morning was this was between 6 and 8. Euro US isn't one of these 4 Forex pairs, so it's not strictly a crossfire trade. But Euro US this morning gave an opportunity. I did have these trend lines in position, so maybe I should have left them there so I can explain. But basically, at 7:30 this morning, or just before 7:30, a move started to present itself. So if I put on the straightforward Forex and the 1362 indicators, you can see, maybe you can understand why I got into this trade. So first of all, you'll need to take my word for it. We were above the green trend line. Therefore, I was only looking for buys rather than sells. At this point here at 7:15, we got a wave up. And I got in on the next candle, partly because there was a bull engulfing candle just on the candle before the wave up. I prefer the bull engulfing to occur after the wave up, but I was happy with this situation here. So I got in on, no, actually I delayed it. I got in on a later candle. I got on the 7:30 candle. I actually broke one of my own rules, which is I normally wait for the PSARs, that's the red dot there. I wait for them to come below the price and turn to green. I was a little bit in a rush, too much a rush to get in. So I broke one of my rules, but it was a successful trade. So I placed my stop loss at 6.8 pips. Now, there must have been a reason for that. I think it was possibly that candle was a bull engulfing at the time. No, that can't have been the case. So I'm demonstrating that I don't always follow my rules, but I was happy with the stop loss of 6.8. I drew this green box to give me 1 to 2 risk to reward, and sure enough, it went up. It did hesitate at that point, but it eventually went up, and it actually wicked up to my take profit line there. I'll try and show you a better example. This is maybe GBP AUD. I think this was the other trade that I took. Yes, yeah. So here we are. We're above on that candle there, which is where I got in. I was just above. By the time I got in, I was above the green trend line. I had a wave up, and at that point there, now why did I choose that as my stop loss? Maybe it was just a five, but no, it was 9 pips. So there was a reason why I chose that as my stop loss. I can't quite see it there, but anyway, I went 1 to 3 on that one. Partly because I always regard the trend line, particularly the 200 moving average, as being a potential stopping point or a hesitation point. So I put my take profit on that line, and you can see it wicked up. It just missed the trend line, but there was a 1 to 3 in that trade there. Apart from that, there was very little else this morning. It was a slow morning. I'll just have a look at the others. You see, we were from 6 a.m. We started the session with price very much in no man's land. It wasn't above the green and it wasn't below the red. It got to 8 a.m. before price moved and made a move up. So at 8 a.m. I stopped watching the charts, but had I stayed looking at the charts, I might have picked up this opportunity here, but that was a 9 o'clock candle. So again, not strictly crossfire, but still a valid trade. So you could have got in on that and ridden it up to either that point or maybe up to this point here. But what I noticed this morning was the bigger moves occurred after the 8 o'clock. I was going to say cut-off point. You don't need to cut off, but convenient to have a 2-hour slot. So Euro NZD, which normally moves fairly well in the morning, again that moved at 8:45. It was above the green line at this point, but it was still moving sideways. It was only when we got to that time, 8:45, 9 o'clock, it started to move up, but still a decent move. We've looked at GBP AUD. I'll just have a look at the other pair. So again, a lot of sideways movement. We were technically above the green line, but we were also still below the red line. And my attitude to that scenario is I always wary that the red line can be a resistance point as well. So you can see it bounced up and down between the two. That's not the best scenario to be in. This is a better scenario where price gets above the red trend line and then moves up. And I didn't take this trade, I just marked this up afterwards. So that was a good positive move, but again, 9:15. Okay, so we're now looking at the 1 1 to 3 a.m. Sorry, 1 to 3 p.m. session. So we're on Euro US. We've got the 1 o'clock candle is now closed, and as you can see, we're above the green trend line. So I'm just going to go through how I think, what goes through my mind when I look at this chart now. I go to the top of that green, the 1 o'clock candle, and I look left. I'll just bring this down and get rid of that. Right, okay. So I'm looking at the top of that 1 o'clock candle. I'm looking left. I'm seeing that there's nothing higher in today's session. So in that case, what I need to do is put a horizontal line on the top of that candle. Right, so now I look at the bottom of the candle, I look left and I look for a lower candle. Now, the next one is just about the same height, but this one is slightly lower. So what I do is I take the magnet tool and I put it close to that and it snaps into position. So then I drag that up so it touches, and it needs to go through the center of the candle. In other words, where the wick would be if there was a wick. There isn't a wick on that candle at the minute, but it needs to go it needs to be central from left to right. So that's in position. I'm looking at this and I'm thinking, where is price now? It's still in what we call no man's land. It's in between the green and the red trend line. So there's nothing to do there. And I do exactly the same for the other 3 pairs. So this is the candle I'm interested in, the 1 o'clock candle. I look at the top of the candle and then I look left and find that this one is the nearest high. And I need that to touch the top of the 1 o'clock wick. There we go. And then look at the bottom of the wick or the 1 o'clock candle, look left, and I think that one is the one I'm interested in. So with the magnet tool on, they snap into place quite easily. GBP USD. So I should have just take a second to just see where price is. It's actually just gone above my green line, so I'll come back to that. That's actually, it's just changed now to a red candle, so I'll not bother with that right now. So 1 o'clock candle, there's a wick at the top. If I look left, that's the nearest high. Take it through the center and look at the bottom of that wick, look left, that's the nearest low. That's it, and GBP card. There's the 1 o'clock candle. There's a wick at the top. If I look across to the left, that's the nearest high. Let's drag it down a little bit so it touches the top of the 1 o'clock wick, and then there's the bottom of the wick on the 1 o'clock. I look left, and that's the nearest low. And that's the setup. We do the markups on the 15-minute chart, and basically without any indicators, additional indicators, you could in theory trade Crossfire from that screen there, but I found that if I drop down to the 5-minute chart, I could get a better or a quicker, an earlier entry. Now, dropping down to a 5-minute chart, in this case, still leaves me in no man's land. So I don't need to look at any other indicators because I'm simply not interested in getting into a trade when price is still in this wedge before the crossover. So I leave that one alone. I'll go back through the pairs until I see something of interest. Right, okay, so that actually is still in the wedge. It did try and get up out above the green trend line, but it's come back down. So there's nothing to be done there. Now this one has made a bit of a move. It was in the wedge. It's now outside. It's now above the green trend line. So immediately I start to think about buys. So I put some indicators on to help me make a decision. So I put the straightforward Forex indicator on. And what I see is not only am I now above the green trend line, but I'm also now in a wave up. We were in a wave down. We're now in a wave up.
Just bear in mind that we've got quite a lot of CAD and US dollar news in about 7 minutes.
Yes, that's right. That's right. Sorry. And thanks for reminding me. I didn't look at the news. I'll look at the news as soon as I finish this bit. Thanks for reminding me, Chris. So we are above the green trend line. We are in a wave up, and the 200 moving average is pointing upwards. So that's all positive. I'll look at the 1362. Now this bottom line is the 62 moving average. The top line is the 13 moving average. And you can see that my settings on the wave are 13, they're coinciding with the 13 moving average. So both of these moving averages are pointing upwards. So I'll look at two others very quickly, and then I'll look at the news. We look at I've got the heat map. If you don't have the heat map, you can use something else, and I'll mention that very shortly. But the heat map is bright green, so that's confirming I should be looking for a buy. It's all bright green. And then we've got the WADA ATA, and the black line is above that's the black, what we call the explosion line, is above the red dead zone line, but the volume is insufficient. So that's going to keep me out of this trade for the time being. And the other thing that will keep me out of the trade is the news. So we look at two lots of news. We look at Forex Factory, and you can see that at 1:30 there's high impact Canadian dollar news. There's three items: high impact, there's a medium impact, and there's also a low impact. So those combined are going to give the banks, the big boys, an excuse to do any manipulation that they want to make at 1:30. And it won't just affect the Canadian dollar, it'll also affect the US dollar, because they are sort of intertwined. They're very closely connected. There is some medium impact US dollar news as well. So 1:30, we would expect some movement, some price movement. The only other thing I'm noticing is that there's another opportunity at 3 UK time, US dollar high impact news, and medium impact news. So there's two opportunities for price manipulation according to according to Forex Factory. My FX book, we've got 5 minutes before the news, 4 minutes according to this. 1, 2, 3, 4, 5, 6 Canadian dollar news items. 3 of them are high impact, 2 of them are medium, 1 of them's low. And also we've got US dollar, 1, 2, 3 high impact and 1 low impact. So there's lots of opportunities for the big boys to make a bit of price manipulation. That's what we like to see in this strategy. However, my policy is I don't want to be caught up in a trade at 1:30. I would rather wait until the dust settles and see which direction price is actually going in. So Euro CAD was setting up nicely for a buy. It's still looking good for a buy, apart from what's going on in the WADA ATA. Now very often keeps me out of a trade that ends up going against, that would end up going against me. So I use this all the time, just to stop me getting into a trade too early. So what else am I seeing when I'm looking at this chart? I'm seeing there's a green dashed line here, which when Kevin programmed the straightforward Forex, he put these dashed lines on to indicate that level would represent a break of structure. In other words, if price gets above that green dashed line, price will have broken structure. So I won't go into that, but you'll have heard Paul talk about that. It's a nice, handy little additional indicator. So, and in my eyes, I would, if I'm thinking about getting in a buy, I would want to get in above that price. So I think there's nothing else to say about that other than news coming in 3 minutes' time. So I'm going to go back through the other pairs, just see if anything else is setting up. Yes, Euro US has gone above the green trend line, so I'm thinking buy. I'm in a wave up. That's another confirmation. The 13 and the 62 are pointing upwards, as is the 200 moving average. The green PSARs are below the price. Those are all confirmations that we should be looking for a buy. This is saying buy. This isn't quite right. The black line is above the red line, but only just. And this histogram is showing that volume is a little bit on the low side. I want to see the histogram above the black line, and I like to see it dark green rather than pale green. So again, I'm gonna hang fire on that one. GBP USD. They're probably all very similar because the big boys will be sitting on the hands waiting for the news. Right, so GBP US dollar is going the opposite way. It's actually come down below the red line. So I think sells, but we're in a wave up. So I don't need to look any further. I need to be in a wave down. This is dark red. It needs to be bright red. It needs to be all bright red or all bright green. It's mixed colors. So that's keeping me out. This is keeping me out because the volume's not there. The reason the volume's not there is people are just sitting on the hands waiting for 130. GBP card. It's still in no man's land. So I don't need to look any further. So because the main news, not entirely all the news, but the main news was on Canadian dollar, I'll sit and watch GBP card because we've got about 5 seconds left before the news hits. So there we go. So this is the 130 candle. Just watch this craziness. It wicked down. It's now going up. So you notice that 130 price came down from that level there, went all the way down there, and then almost immediately went all the way back up there. But we'll just wait till the end of this minute. You can switch to the 1 minute chart just to sort of emphasize how quick that movement was. This is all in 1 minute. Now that movement could be genuinely the effect of the news, or it could be the big boys manipulating price. possibly because we've been going sideways, we've been in consolidation for some time, possibly dipping down here to take out stop losses where people were thinking it was going to go, price was going to go up, and then going up and taking out stop losses from people who were thinking price was going to go down. But that isn't, to me, that doesn't look like normal market activity. That looks like price manipulation. Now, I'm just keeping an eye on the situation. I'll go back to the 5 minute, not quite as volatile as the 1 minute. So from a crossfire perspective, prices looks like it's going above the green trend line, but it's not quite sure yet.
Richard?
Yeah.
How can you tell the difference between what you just said, price manipulation?
Yeah.
How do you tell the difference between what would be a normal movement and price manipulation by the big boys?
Well, if you look at, I'll try and get it down to today. Okay, so that's the start of today's trading. That blue line there. If you look at this movement here, that's the biggest movement we've had so far today. That's one candle. There was a bit of at 5 to 8 this morning. There was a big wick up, and that possibly would have been price manipulation because I don't think there was any news at that time. But I mean, I'm not saying I'm 100% saying that is price manipulation, but it looks pretty unusual, out of context with what's been going on so far today. Look at these very small candles. Most of them are pretty small. There's the odd, that's the odd one out. There was a big movement down here, but it was over several candles. It wasn't all in one move. And because of the news, it's high impact news, and we know that the markets manipulate price. And look at where price went. It went. That was the highest price has been all day. They just took it slightly above that, taking out stop losses. They took it almost down to this breaker structure line. That's why there's a breaker structure there, because that was the lowest it had been. It had been going up and up and up, and then it came down, and then it went up and up and up. So that was the breaker structure point. It almost went down to that. So I can't absolutely guarantee that that's manipulation, but I've certainly got a very strong feeling. I'll look at the other three pairs and see if they're all as to my eye, that that's fairly obvious. US, Euro US on the 1330 candle, which is that one there. Look at that massive wick. Again, it nearly went down to that breaker structure point, but that's a huge wick. Let's just measure what happened. So if we look at that candle, opened at the top of that red candle there, and if I measure down to where price went, which is there, well, it looks more than it is. It's 10 pips. But if you consider that to move price by 1 pip, it takes $10 million. So there's $100 million in that single move downwards. So am I being cynical, or I think most people who've been trading for a while would suspect price manipulation at that point. And why do they do it? Well, they do it to take out stop losses. Some people talk about a stop hunt. So I'm just trying to think about a simple way to explain it. If you were one of the big banks or the big hedge funds or pension funds, I'm going to carry on talking whilst I'm looking at these other pairs. So that's a similar move. It moved up and then it moved down. And I suspect that there's money being taken out of people's stop losses. So I'll come back to that. There goes. It went right down there. It's now gone all the way back up there. And GBP card, very similar. Right. So when banks want to make some money, they have very expensive software, which is beyond my pocket and beyond your pocket probably, which allows them to see how much money is placed at different levels, what trades are being placed at different levels. So they will be able to see that at this price down here, 167.38, or is probably at 16740, because that's how they operate. They're talking round numbers. So at 167.4, that's a significant price point. They can see that there are millions of dollars sitting there in trades, and they can also differentiate between buys, sells, stop losses, because the stop loss is an order, the same as a buy order or sell order. It's an order, and you tell the market to take you out when price dips down to that point. So if you've got $100 sitting in there, the big boys can see that $100. They can't see your individual $100, but they can see the total of the stop losses that are sitting there just waiting to be taken. And if they look above the price, they'll see that there are people they're looking at this price rotation, consolidation, and some people are saying, oh, well, this is obviously going to go down. So they'll put their stop loss up there. So 1.6760, nice round number. Let's push price up there and take out all of those stop losses. Now the big boys can see how much they're going to get when they go down there and take everybody's stop loss out, and how much they're going to get when they take price up there to take those stop losses out. And just in round numbers, every 1 pip in price movement takes $10 million. So they moved it up. Well, first of all, they moved it down, then they moved it up. And if you measure the distance from the top of that wick to the bottom of that wick, there's 25 times $10 million. $250 million they had to put into moving price down and then moving price up. So they were risking $250 million. But they know how much was sitting there in stop losses. So that's a really crude explanation, Michelle, but does it help in any way?
Yes, it does. That's a very good way of explaining it. Thank you.
Yeah, I'm trying not to be, well, I'm not technical, I'm not an expert. I just know how the market works. And well, I've learned how the market works, and Paul explains it in more well, Paul and Kevin explain it in more specific detail, but you've got the gist of it there. They moved it down to take out stop losses, and then they moved it up to take out stop losses. And look what's happened now. We've gone back to where they started. Pretty much. That point there, where price is now, is more or less where it's been for the last hour. It's never, well, even there, it was. So back to 12 o'clock lunch, 12 o'clock noon UK time, it's just been sitting around that. And they've been pushing price up and then pushing it down, then pushing it up and then pushing it down and pushing it up, and then they use the news as an excuse to do this big manipulation. And they just walk away with, well, they call us retail traders, the small boys, small people who have small accounts, and put maybe $100 or $10 or whatever into a stop loss, and they just wipe it all out. Which is why for many years now, I've never ever traded on the news, because you cannot tell, you cannot predict whether price is going to go up first and then down, or whether it's going to go down first and then up. But you've seen on those 4 pairs, I'll just double check. Well, in this case, the price simply went up, didn't it? Price started, well, that's the 130 candle. So price mainly went down, but then in the next candle, they took it all the way up there. So that's a 5-minute candle. Let's see where most of that action occurred. I'll drop down to the 1-minute chart. So at 1:30, they took it right down there. And then they took it back to where it was, and then they went all the way up there. And again, just to reiterate, if I measure the size of that move, again, it's 23, so $230 million to push price down and then push price up. But they've collected more than that in stop losses down here, and they've collected more than that in stop losses up here. So some people trade the news. Personally, I don't. I'll go back to the 5-minute chart. So whilst we're just waiting, I refer to this as waiting for the dust to settle down. It's still being crazy. It's gone all the way down there, and it's gone all the way up there, and it's just sort of making its mind up now. Let me just look at the big picture. Right, so Euro US, we're above the green trend line. That's the green trend line, the bottom one there. This is this line here is Kevin's way of marking a potential stop loss. So we're above the green trend line. We are in a wave up. So that's telling me I should be thinking about a buy. The wave up is telling me I should be thinking about a buy. We're above the 200 moving average, it's pointing upwards. The 62 moving average is pointing upwards. The 13 moving average is pointing upwards. The PSAR's green and below price, pushing price up. So everything on that chart is saying buy. This is all bright green, that's saying buy. This is saying buy quite strongly. So I'm not going to live trade, but I'm going to show you how I would trade. I would get a long position on my favorites bar there. That's a long position. I would enter where price is now. If I can just move that out of the way. I'll start again. So long position, get in where price is now. I mentioned stop losses. There are 2 potential stop losses here. One is this one, which is the bull engulfing candle. There is a bigger stop loss down here, which is where the wave up candle occurred. And again, it's clearly marked out. I'll show you the settings on that in case they're not on your screen. But first of all, I'm going to place my stop loss at this point here. So I've got a 17.2 stop loss, 17.2 pip stop loss. I would only take a trade if there was a chance that I would get 1 to 2 risk to reward. At least that's my policy these days. So I would need price to get up there, roughly in that position there, for me to win this trade. So just to make it absolutely clear, that point there is where I need price to get to. I'm just my way of thinking. So I've got a stop loss down here. I've got an entry point here. and I've got a target up there. And looking at the chart, I'll just reset that. It's looking a bit squashed.
Richard, there is an outstanding volume profile just above that as well. It's roughly where your take profit is, I think,
Okay.
on the 15-minute.
Okay, I'll show that in 1 second. What I was going to say was, oh yes, first of all, I was going to show where the settings are if you haven't got these. See this green line at the bottom of that engulfing candle. I've got the settings to show me that, and if I go into settings on inputs, it's not on there, it's style. So down at the bottom of style, it says lines. You see that box there? If I untick that box and come out of it, that line will have disappeared. Can you see there? There was a green line, which I use as my stop loss. There was also a green line on that candle there. I've just removed it. So if you go, if you want those lines on, if you go into settings, go into style, and down at the bottom, if you click on lines, it's just a visual thing, just a convenience thing, right? So whilst that's doing its thing, and I've just sort of taken a quick snapshot in my mind of that. It's still above the green line. We're still in a wave up. We've still got bright green here, and the black line is above the red line. It's not quite as strong a volume as I would like it to be, and that's reflected in the fact that prices just come back a little bit. But everything is still saying to me, I'm good to stay in that trade for a sell. Now, to go back to Chris's point, he talked about a POC. So where my take profit is there, let's use round numbers. I'm roughly at 1.1. I'm slightly above 1.1, but just for ease of memory, I've got another chart. If I save, that's my SFF chart, my straightforward Forex chart. I've got another chart, and I call it SVP, which is session volume profile. It's still on Euro USD, and it's still 5 minutes. But if I click on that, you should see in a second. Okay. Yeah, maybe my settings are slightly out on this, but this red line here is a point of control from Thursday the 22nd, and it's an outstanding point of control because after Thursday, price has never been back there. And if you watch Paul's sessions, he talks about imbalance. And he always says that price is going to go, absolutely must go back to take out that imbalance. And if you look at these outstanding POCs, I think of those in the same way. It absolutely must go back and take that out. We discount the fact that it was touching it several times on Thursday. We only think about after Thursday, and that is still outstanding. And therefore, we expect price to go up there. The difference between Chris's number and my number is probably something to do with our settings, the way I've got it set up, but it is still a significant point. So I would expect this price to go up there.
Richard, do you do it on the 70% then of the session?
No, I've actually, and this is what I'm talking about, where the difference might be.
Yeah, that's what I was just thinking. That might be the difference, mightn't it? Yeah.
I've actually got it on total volume. When I used to do this, the V70, I would put it. I know that's no, I'm talking rubbish. I've got the volume area set at 100. I used to do it at 70, and there's nothing wrong with 70. Absolutely nothing wrong with 70.
Why have you changed to 100? What was
Because I'm trying to keep the charts clean or simple. What I've also done is value area. If I put the value area on, you can see that there's a difference in color. I need to put those lines on, don't I? Need to put the lines on. So style, value area high, value area low. So you get. So that's the 70% area.
Yeah, it starts to mess up your charts, doesn't it? Yeah,
It sort of complicates the chart, but it's still valid. Yeah. It's still valid. Nothing wrong with it. But as Chris was pointing out, there's an outstanding point of control. May not be. It could be a matter of where the settings are, whether it's at that price or slightly above. But nevertheless, it still exists. It's above the current price. So in other words, it's a very sound reason to expect price might go up there and take that out. The other thing I've got in there is I've got imbalance. There's an indicator called imbalance, which I've put on. And you can see the black candles. Those are imbalance candles. So I'm using that as sort of backup, as supplementary information. I'm looking for some imbalance up here, look.
Where did you get that imbalance indicator, Richard?
If we go to indicators, metrics and strategies up here, if you type in imbalance, and I believe it's the first one.
Okay.
Or it might have been the second one. They're both there. You could click on. I'll click on that one, and I believe that's the one. I've got it in favourites anyway, or maybe it was that one. I don't know. I think I'm. If I'm on that one, I might go to that one because it's got 1,500 people who've got it on their charts rather than 287. So it's a bit more popular. But you can put that on. The problem you will have is if you I'm on the first level of trading view, so I'm restricted to 5 indicators on any one chart. So on my straightforward Forex indicator, I've already got 5 indicators. So I've just created another chart, and I can put another 5 indicators on this chart. So that's the imbalance that I've just put on. So you can see there, this big imbalance. The problem I found with it was it's black, but it may have been taken out. So you need to double check. It doesn't disappear when it gets taken out. That's the problem with it. So I suspect that one has already been taken out. But we were looking at one here. Yeah, there's quite a few. There's some imbalance more or less where the POC is, and some above it there. But I'm using that mainly as additional confirmation. I'm sort of now expecting price could well go up from where it is up to that point. So as Chris said, there's an outstanding POC. It's got to be taken out at some point. It won't be there for forever. Well, it might be there next year. I don't know. I know it will be taken out. I just don't know when. This is today's point of control, which I take less notice of because that moves all the time. That changes as the day goes by. Yesterday's point of control was there, so price might come down to take that out. It has been taken out once, but it can still go back to that point again, and the same with that one. So those are all potential, I suppose we call them points of interest. If I save that and then go back to my SFF chart, so you can, if you've got the, I think if you've got a free version of TradingView, you may not have this, but if you've got the lowest price one, you'll have the ability to, if you click on your charts, click on that manage layouts, and it'll give you, you can add a new layout, and I think you can add certainly 3, you might be able to add 5, I'm not quite sure. But if you then go back to the SFF, it'll take you back to the original chart, and taking its time. So I'm just going to reset that. It looks a bit squashed. Come on. Never mind. So I need to show something else before I close my session. So price, if I had got into this trade on a live account, as opposed to doing this demo thing, that would be my entry point. Price is currently below my entry, so I would be in drawdown, but would I be getting out? Well, I just do a quick review of where I am, and I say, right, I'm still above the green trend line, so that's good. I'm still in the wave up, so that's good. The 13, there's the wave up. The 13 moving average is still pointing upwards. If you can't see it, you can go, you can get rid of the candles, and you can see that the 13 is still moving upwards. Put the candles back on. The 62 is still pointing upwards. The 200 is still pointing upwards. This is still saying buy. The explosion line is above the dead zone, but the volume's not quite there. We need a much stronger volume, but I would stay in that. There's nothing yet telling me to get out. If this black line starts to come back down towards the red line, I might consider getting out. If that changes to more than one color, I might consider getting out. If that wave changes from wave up to wave down, I might consider getting out. The other thing I would consider is the PSAR. If it goes above and it's red, I might consider getting out. So I need to just show you my Crossfire checklist. This is in Discord under Crossfire, and it's got a subheading Crossfire checklist. And I'm just going to go very quickly through. I've listed all the indicators that I use to help me make buying or make trading decisions. So I've got I'm breaking my decisions into entry, stop loss, and take profit. Those are the 3 decisions you need to make. I use straightforward Forex, and in my case, I use the short wave, but there's nothing wrong with using the long wave if you find that works for you. I think the short wave gets me an early entry. I use the 1362 zone to help me. I use the heat map, the WTT_TH, but that's not available now. So if you didn't get it before, you won't be able to get it now. That's the Wada Atta. I'll put a note that if you can't get the heat map, you can use the whole suite by In Silico. I use the S3P. You've just seen the volume profile with the points of control. Occasionally, I use pivots. That's another indicator that you can use, and that will show you support and resistance lines, basically. So just to go on to my thought process is price above the green trend line or below the red trend line? If it's above the green, I look for buys. If it's below the red, I look for sells. If it's between and we're still before the crossover, I definitely say stay out. So when I've decided if it's above the green trend line or below the red, I then say, right, so do I have a corresponding wave up if I'm looking for buys, or wave down if I'm looking for sells? I need those two to be in confluence. I then look for an engulfing candle because that'll help me with my stop loss. So an engulfing candle sort of shows momentum in one direction or another. So bear engulfing or bull engulfing. I look at where price is in relation to the 200 moving average, and first thing I think of is if price is moving towards a 200 moving average, I consider, is there enough room to profit? Because that 200 moving average may well be a very strong resistance point, and it may stop price in its tracks. Is price between the green and red trend lines after the crossover? Again, if it is there enough room to profit? I'll try and show you that very quickly in a minute. 1362 200 moving average, all in my favor, so all pointing up if I'm going for a buy, or all pointing down if I'm going for a sell. I then look for PSARs. If they are green and below the price, that's supporting my buying decision. If they are red and above the price, that supports a selling decision. The heat map, if you can get it, needs to be all bright green or all bright red, not mixed colors. And the water atta, the black explosion line, needs to be above the dead zone, and the histogram needs to be above the black explosion line. Stop loss I've already mentioned. It can either be the wave up or wave down candle, or it can be the engulfing candle. Take profit, you've got a choice. Any trend line is a potential resistance point, break of structure, previous highs and lows, outstanding POCs, areas of imbalance. If you're using pivots, that might help. Where the PSARs change from up to down or down to up, and where the engulfing candles change from up to down, from bear to engulfing. Those are all potential take profit points. And that's just a final note, beware of wicks and indecision candle, and I'll try and show you examples of those and of these where when I'm looking for if there's enough room to profit, and then I'm going to call it a day. So there's not a good example there, so I'll go elsewhere. Not a good example there, but I'll just talk about this. If price was in this wedge, you know that there's a crossover. So if price is stuck between the red and the green trend line, if price was above the green trend line, I'd be looking for buys, wouldn't I? But I would also consider this as a potential stopping point, a resistance area. And quite often if price is heading north, it'll get stuck at that point. It might well go on beyond it later, but it will probably get stuck at that point. So I would measure that gap and see if I've got enough profit in that, enough room to profit in that gap. And certainly you potentially use that red trend line as a take profit. If I was taking a buy, now in this, when you get down here, you've got a huge gap, so it's not so much of a problem. But if you were here, you need to consider that red trend line as a potential target. I'm trying to find an example where we've got the 200 moving average as a potential resistance. No, there's not an example there. Let's have a look at random pairs. Right, okay. So if I was in this pair for a sell, I've got a wave down. So I've got the wave blocks there, they're red, not green, so we're definitely in a wave down. If I was considering getting in for a sell, I would take heed of this 200 moving average, because price may well come down and hesitate when it gets to that 200 moving average. You can see there, it came up to the moving average, it hesitated, it went through it, and then it came back down to it. So that's a bit of a sticking point. The moving average can be a sticking point. It did eventually break through and go on its way north, but it did stick there for a while. So I would consider that as a potential target. I would measure it and I would say, is it worth me getting in? Because that's where price is now. Price may well stick there. It's actually 17 or 18 pips, so it's worth getting in. But that's how I use the moving average as a potential target and sort of a stop profit, if you like. I'm going to go back to that pair we were looking at, and then I'm going to call it a day. So any last questions, please? So Euro, I'll go to Euro US first.
Richard, I have a question.
Yeah.
Are there any safe time periods to focus on in trading than not? In other words, are the banks on top of this all the time that the markets are open? That you have observed?
I've traded lots of different strategies in the past, and I've traded early in the morning, I've traded during the day, and I've traded evening time. I think the best time to trade is generally when London and New York are both open. So that's 1 o'clock, 1 p.m. UK time. That's 8 a.m. New York time. So New York opens at 8 a.m. I believe, and London is still open. So there's a crossover, and that when you've got London and New York both open together, that is when you get the highest volumes. Prior to that, the London, if you can't trade, so what I'm saying is between 1 and my time, 1 p.m. London time and 4 p.m. London time, there's a 3-hour overlap of London and New York. So before that, you've got London on its own, and after that, you've got New York on its own. After New York, volumes get, well, in that period, you get the heaviest volumes, the biggest volumes. When London closes, the volumes tend to drop down a bit, but New York's still open. When New York closes, you down to the Asian market. So my time, 10 p.m. at night, when New York closes, we're in the Asian market, and volumes are very low, right through till 8 a.m. the following day. So if you look at the market opens and market closes, if you look for when the London market is opened at the same time as the New York market, that is probably the prime time for trading. But then it depends on your availability. So what's the best time for you to trade? Because there are still trading opportunities outside of that peak time. And I do most of my trading, my live trading, between 6 a.m. and 8 a.m. because I'm trading Crossfire. And we use that price manipulation that we suspect goes on where there's a handover between the markets and a crossover between the markets. Again, that's why I like the Crossfire session, the Crossfire strategy, because I've got 2 bites at the cherry. I can trade it between 6 a.m. and 8 a.m. or I can trade it between 1 p.m. and 3 p.m. That's where I am with trading at the minute. I get up early in the morning, and I'm sitting looking at the charts at 6 a.m. with a view to getting everything done and dusted by 8 a.m. And that's ideal for me, because then I can go about my daily life. That's my lifestyle. I like to trade early in the morning and then walk away. But depends on your lifestyle. Are you on New York time?
Yes, sir. No, we're Central Time, so we're an hour behind New York.
Okay, so 1 o'clock UK time is 7 a.m. your time.
Yes.
Okay, so that to me that would be a good time to start trading, because New York is not quite open yet. New York will open at 8 a.m. I believe your time. So sort of 7 till 9 would probably be a perfect time for you, because you've got London still open and New York still has just opened or just about to open. And that's a peak activity in trading. So if you can afford a couple of hours to, at that time, that's probably the best time to trade. If not, then later in the New York session, whilst London is still open, and you can Google FX Forex market trading sessions. And I think we've got an indicator on it, which give you a visual. You can actually put an indicator on your chart, and it'll show you which markets are open at the time you're looking at the price. But I know for a fact that New York opened at just over an hour ago, and London will stay open together with New York until 4 p.m. So we've got another couple of hours of high volume activity, except we're at the end of June and the markets are just a bit flat at the minute. But under normal circumstances, peak time for trading is 1 p.m. UK time, so that's 7 a.m. as far as you're concerned, until 4, so that would be 11, 10, 7 till 10 is probably your best times to trade if you're available.
Okay, thank you.
But have a look for the indicator. There is one in, I'm not sure what it comes under, but I'll just try one thing first. Session volume, sessions on chart. We'll have a look at that one. I need to get rid of one of the indicators. So if I get rid of that one and go back to that. So I just typed in sessions. I look for sessions on chart. That's got 6,500 people have got it, so must be pretty decent. And I'm going to get complicated now because I need to go into the settings. Inputs. Yeah, you would need to tick a few boxes. You need to put some colors on it. It's all grey. So, but you could, in theory, have the sessions marked so it would at you have different times on your chart, but as far as I'm concerned, it would mark the fact that at 8 a.m. in the morning that the London session started, and then it would mark the fact that at 1 p.m. the New York overlapped with the London session. So have a look at that. But if you're limited to how many indicators you can have on any chart at once, just see if you can Google the Forex market opening times and maybe print it off, and then it'll be a reminder for you.
Okay, thank you.
Okay, you're very welcome. We didn't get a trade. This one is just, if I just reset this chart.
The Lux Algo one, Richard, is quite good for sessions.
Say again, Anne?
The one by Lux Algo, that's quite good for sessions.
Okay, so look, there's an indicator on TradingView, and it's by Lux Algo. They say well, if you're sort of struggling to remember the sessions, just print it out. Just go to Google and they'll be there. Print it out and just keep it by your computer. I know Brian Knight's got it on his charts, hasn't he? He's got the sessions on his charts.
Yeah, the Lux Algo one as well doesn't need setting up or anything. It's just got colours, and you can click it on to check when the sessions are and click it off. So, yeah. All
right. Okay. That's great. Okay. Thanks for that. So I'm just going to do a quick review of where I am with trading on Crossfire right now. I got in this just for demonstration purposes. That was my entry point, and it's since gone backwards. Right. So if I just extend this, and I need to take a decision. If I was trading this, I'll be looking at, do I cut my losses and get out, or do I stay in? So let's see where I am. I'm still above the green trend line, so that's positive. I am still in the wave up, so that's positive. This heat map is still all bright green, saying buy, so that's positive. This black explosion line is well above the red, so that's positive. The problem is the volume's just not there in the market. We need this histogram to be above the black line. The reason that price is moving sideways is there's very little volume in the market right now. I would be tempted to stay in this for a buy, partly because the 200 moving average is still heading upwards. The wave is still heading upwards, not quite as big as they were. The blocks are not quite as big as they were, but the PSARs are still green and still below the price. And if I put the 1362 back on, you can see that the 13 is still heading north. The 62 is still heading north. And price itself is coming back to almost to where it was. So I haven't given up on this trade for a buy. I'm thinking that it might be a little bit ambitious to go for a 1 to 2. But at the end of the day, because I've got good trade management, my lot size means that if I lose this trade, in other words, if price comes down and hits the bottom of that red, I will have lost exactly 1% of my account balance. And in staying in the trade, I'm potentially going to make 2% of my account balance. So I'm quite happy risking losing 1%. And that's what we call good risk management. I'm only going to lose 1%, and I have the potential of making 2% if it goes my way. So that's my thoughts on that trade. I'm going to look very quickly at the other 3 pairs, and I'm definitely going to call it a day. So here we are on EuroCAD. Oh, sorry, on Euro USD. I've also got the fact that I know that there's an outstanding point of control up in this area somewhere. So price might be going to take that point of control out. So weighing up the possibilities, I'm sticking with my decision to take a buy. Nothing's turned against me just yet. It's just that the volume is so low. So look at EuroCAD. I'm above the green trend line, so I'm thinking about buys. I'm still in a wave up. All of the moving averages are still pointing upwards. This is still all green. That's above the red. We've got the same problem. We don't have sufficient volume. The only downside is we've got a red PSR pushing price down. So maybe that one, if I'd got in it, I might be getting a bit worried about that. But I wouldn't be in it because I'm in a Euro USD. And my policy is I never get in two Euro pairs at the same time. So I wouldn't, even in real life, I wouldn't have been in that pair at the same time as the Euro USD. And I'm going to take a quick look at the two GB pairs, GBP pairs. I'm above the green trend line, so I'm thinking buys. I'm still in a wave up, I'm thinking buys. This is still all green, I'm still thinking buys. This is the black explosion line is above the red and it's moving away from it. That's been a strong, very strong histogram. It's not quite as strong now, and I'll tell you why. Because price is heading pretty close to the red trend line. It tried to get beyond it at that point, and it's going to try again, and it'll keep on trying until it makes it past, but it's going to hesitate at that point. So if I had got in for a buy, I would set that as my target. Not because it won't go beyond that point, but because it'll hesitate at that point. So I would take my profits and get out at that point until it broke over above the red trend line. So that's one of my targets on my checklist. I would have set my target at there. The longer this goes on, the bigger that gap is going to be. But right now, it's bouncing off that red trend line. And GBP CAD will probably be very similar. No, it's actually broken away. So it's above the green. So I'm thinking buy. I'm still in this wave up. Now, been in a wave up for some time now. 200 moving averages pointing up, 13 and 62 are pointing up. We've got a bull engulfing candle. So that's all good news. This is good. This is good-ish. If that histogram gets a bit, there we go. That's what I was looking for. I wanted it to be dark green. And I wanted to sort of stepping an upward step rather than a downward step, but that's looking good. So GBP, now thinking about my policy about not being in two Euro pairs, this is giving me an opportunity to get in a different pair. And I'll just do this once, and then I'm definitely gonna. So I'll take a short position. I would get in at the current price. No, I don't want a short position. I want a long position. So I probably wouldn't have got in because I got a bit of a red candle there, but I'm going to demonstrate this. So where's my stop loss going to be? Well, it's got to be that green line there. That's the nearest. So I'll put it there. It's actually slightly below. It's 19 pips. Just move it up a little bit. So that's accurate. So it's 17 pips, a little bit on the high side. But if I take that at 1 to 2, so that's 1 to 2. So that's my target. I might look at the POCs and see if there's an outstanding POC at roundabout or above that. So need it to be sort of 16821. SVP, I would need to be on GBP card. Come on. I think my computer's getting tired. Okay, so there we go. No, that's Euro US. We need to be on a different pair. We need to be GBP card. So there isn't an outstanding point of control to aim at. So maybe that wasn't a good decision. Go back a little bit further and see if there's anything. My computer's not playing. No, there's nothing in the recent past. I'll just quickly look on the hour chart, see if I can get a bit more on. Yeah, right, I've got some more. So that's where price is now. The nearest outstanding point of control is way up there, 1.7 roughly, which is probably a little bit optimistic. Page. Back to my straightforward Forex chart. I'll look and see how far we are off 1.7. Yeah, we're quite a distance. Okay. So the outstanding point of control is roughly up there. Probably in the current market situation, that's probably a little bit optimistic. But anyway. You see,
Thank you, Richard. I just have to go now, but thank you very, very much. Okay.
Well, I'm gonna end the session now unless there's any last questions. And I will put this in the Discord along with Paul's recorded sessions if YouTube will allow me to do that. So if anybody wants to go back over it, they can do. Hope it's been useful, and I will see you on Friday.
Thanks, Richard.
Thanks very much indeed. Cheers now.
Thanks, Richard.